Hi, and thanks for joining us today. Customer Power is a programme of research exploring the relationships that customers have with UK companies. We've previously looked at the financial services, mobile, pay TV and energy sectors, and today we're putting retail banks back under the spotlight. My name is Debbie Senior, and I'm a stakeholder relationship consultant at Harris Interactive. And today I'm going to take you through the final webcast in a series of 4. So for the next 15 minutes or so, I'll look at the demand for new product and service innovations and why this seems to be a defining moment for banks to tailor their propositions even more to meet their different needs. We've got lots more data from this self-funded research, so if you'd like to hear more, just get in touch and my contact details will appear on screen at the end. So in the first few slides, we'll turn our attention to a specific need, about how banks can better support customers who are coping with financial issues due to the current economic situation, i.e. those people who are struggling to keep up with bills and other repayments. And then we'll look generally at reactions to around 10 alternative products and services that banks could offer, and we'll let you know what the winners are. But firstly, it will come as no surprise to know that many consumers in the UK are finding life tough. According to a Sky report in July of this year, 4 million people owe money to their energy provider, with debts averaging £128. We can see the figures quoted here about the number of new debt problems being dealt with by the CAB, and the BBC also recently ran a story about Citizens Advice helping 27,000 people between January and March this year with council tax arrears, which is an increase of 17% on the same period in 2013. And from other research, we're aware that the average person has around 9 or 10 bills to pay each month. Here we see that over half of consumers are struggling to some extent to keep up with these bills and other repayments, and just under a third are finding it a constant struggle to manage their finances, and some have already fallen behind. So the days of having a one-size-fits-all approach by banks looks very jaded. And when we look at also how these customers with financial difficulties feel, it's clearly more negative than many other customers. Many cite frustration, feel less confident, and a feeling that they're not in control, all of which stack up to being a very stressful existence. A key concern, though, is how many say they don't find banks easy to contact, and also try and avoid speaking to them entirely. So what can banks actually do to help? Well, apart from showing understanding and empathy, they could create specific tools and services to better meet these individual needs. Around 60% of consumers with financial difficulties have some interest in getting help with their money management, and 20% of these are very keen for that support. So it looks like banks could be doing things differently, but they need to be mindful of the balance involved, and as one female customer aged 25 to 34 summed up, "I would like my bank to advise me if they felt I could save money, e.g. by changing into some other service, but sometimes I like to be left alone and I want to make my own financial decisions, and I'd only want a service like this if I had actually agreed it beforehand." So in the next phase of this webcast, we're going to look at the demand for alternative services that banks could provide. We all know that innovation is critical in attracting new customers and demonstrating brand energy, but it's also important for retaining business and avoiding customers feeling that the grass is greener on the other side. Banks, like all other businesses in the UK, must keep up with changing consumer behaviour. And according to author Alan Moore, in his book No Straight Lines, that discusses the challenges of the non-linear world we now exist in, the average number of screens in a household that can stream video is around 10, and the average person looks at their smartphone around 200 times a day. We're definitely in a digital age. Consumers are buying holidays, flights, music, clothing, books and so on, all online, but they're also choosing the channel that suits them best at a specific moment in time. So here we tested 10 innovations, including some technology-led options, and here are the results. Okay, let's start with the innovations that actually created the fewest ripples. Just over 1/4 of customers showed interest in being able to pay people using a mobile number instead of their bank account number, and this might be because of security concerns amongst the general population. But there is actually pretty high interest from those who are comfortable with mobile banking. And the financial sector is also keen on this initiative, given the launch of PayM in April this year, which is in the process of being rolled out, and the benefit of countering the likes of PayPal Mobile that also offers a similar service. But the consumer jury is still out at this stage. Similar numbers of customers showed interest in being able to hold a video chat with their bank. Now, this isn't that new, and it's been talked about for quite a while, but many people just aren't really ready for it yet. Saying that, we do see greater interest from mobile users again, perhaps not unsurprisingly, given the likes of Skype and Apple FaceTime applications that these people are using more often. But new customers are also interested, and this could be a cost-effective and innovative way to engage with them in their early days of their banking relationship and enhance the banking brand. And given this approach is being considered elsewhere, for examples for discussions with your GP, we feel this is still one to watch for the future. Well, next up is remote banking, and this is where consumers can gain advice or manage their account from a private booth in a branch. Again, this isn't new, and banks in India and Australia are already trialling or using this technology, but there is actually some appetite for it, particularly from those consumers who are omni-channel users. And this also could have a very specific use, to save customers who are considering switching, or to engage those who have actually gone overdrawn and need quick advice and help. Interestingly, many customers show interest in obtaining non-traditional products and services through their bank. And again, this is particular appeal to newer customers, those with package accounts, and those using mobile apps. The discounted goods also strike a chord with those struggling financially and those with overdrafts. And to some degree, banks have started to offer savings on how customers actually spend their money. For example, the Santander 123 account, Halifax giving 15% off a Morrison's shop, and NatWest Cashback Plus. So perhaps this will be the start of a buyer's club or an equivalent, as the worlds of banking and retailing merge more and more, and it will be interesting to see which partnerships develop to meet those customer needs. Now, this is one of my particular favourites, given I'd love to see bank branches being repositioned as community hubs and providing a more relaxed environment for their customers. And I'm an online and mobile banking customer. But I certainly see a role for branches as brand builders and a way to drive the emotional connection with customers through offering support and advice. So why is it that so many banks are still insistent on chaining their pens down in the branch and in effect making you feel you're not trusted as soon as you walk through the door? In an age of retailing, where I can walk into an Apple store and be trusted to play with a multitude of cool products which are valued at hundreds of pounds, I really wonder why banks can't get this right. And to be able to pull this off in an authentic way, I feel it will take a cultural change by banks to redefine their relationships with their customers, and perhaps just like Virgin Money is starting to do with its lounges in the UK. Now, we've already mentioned money management earlier in this webcast, and as well as supporting financially vulnerable customers, there is high interest in budgeting and categorisation tools from others, and these include newer customers, mobile users, and those with packaged accounts. And in terms of categorisation tools, some banks like Lloyds, Barclays and Nationwide, they're already doing this fairly well, and they're highlighting how customers have spent their money in terms of direct debit, standing orders and card transactions. But in the era of big data, could banks actually take this a step further? Maybe they could categorise discretionary spend from what appears to be household bills, for example. But whatever banks decide to offer, they do need to make sure it's easy to use, and also that they deal with the barriers we saw earlier on. Where we're down now to the last two innovations with the highest appeal to consumers, and because many people use mobile apps for banking and other transactions, it's not surprising to see high levels of interest for booking an appointment in branch via this channel. It's a highly convenient and flexible method for many customers, and it also links directly to their mobile calendar as a reminder. As far as we're aware, there isn't anything out there like this in banking right now, but it has been prevalent in retailing and supermarkets for years, and even some doctors' surgeries are enabling their patients to do this right now, so it really looks like banks need to catch up. Enabling appointments by app looks like it could be a quick win to get newer customers on board by cross-selling them other products and services, whilst a really strong brand halo effect is in place, and also again as a way of saving customers who are likely to be considering switching elsewhere. And finally, our innovation winner. Over half of customers are interested in getting tailored advice on direct debits to ensure they're getting the best deals. And from our Customer Power Relationship series, there is actually a general feeling amongst existing banking, energy, pay TV and mobile customers that they don't get as good a deal as newer customers, and it leaves a bad taste of being unrewarded for their loyalty. So this proactive route could be a way to address that balance for many people. So it looks like it's time to really put the retail back into banking and recognise that what the consumers of today and tomorrow want from banks will be partly created from the speed of technological change and innovation from outside of the sector. We feel it's time for banks to stop thinking of a one-size-fits-all approach and to really focus on tailoring and personalising bank relationships to meet those different customer needs. And not just because it's good for customers, but also because it makes financial sense. According to McKinsey modelling done in August 2014, European banks pursuing a full digital transformation can gain improvements in earning before interest of more than 40% over the next 5 years. Well, that's plenty to think about. And who knows where the Internet of Everything and wearable tech will take us beyond what we've discussed today. According to a recent article in The Telegraph, with the developments of weaving digital paper into clothing, we may all end up using our watches or even our jackets to buy products and access accounts in the future. Thanks very much for your time, and do get in touch if you'd like to hear more.